What's good? What's good? Welcome to another episode of Cheef and Chart. It's your man, Don Bucks. This is brought to you by Rap and Dough. You know, the home of money conversations and all that. But, Cheef and Chart, we talk about one of the solutions to Black wealth, and that's options trading. That's what I bring to the table and all that. So make sure you if this is your first time, make sure you hit the like, subscribe, and notification bell so you can be notified when your boy go live. But this is episode Hawaiian. Why? Man, ash flying in my eye and shit. Because that's what I'm chiefing. And I seen what I saw. Man. If y'all was tapped in yesterday, y'all would have had a good day in the market today, right? Because if you was tapped in yesterday, I do what the chart say Sunday, every Sunday. Give the people a heads up on what I see on the damn charts. Because these charts be tripping up a lot of folks. And I get it because it tripped me up for a minute before I got it. And I'm still learning, right? So don't beat yourself up. Just like anything else. It's mechanical before it becomes like second nature. You had both hands on the wheel when you first started driving. Now you texting and driving, you driving one hand, all types of wild shit. So it's the same thing with these charts. The more you get at them, the more you look at them, the more you follow a structure. And I give it to you guys. So if you haven't taken my course, make sure you hit the description and grab it. It's on sale for only $50. It's only a limited supply though. But it's mechanical until it becomes second nature, right? And it's crazy because, as adults, we tend to think because we're adults, we're supposed to learn stuff automatically. But no, everyone has a learning curve, right? Everyone has a learning curve. And I realized in college that, you learn stuff about yourself when you're growing, right? So in college, before college, like in high school, I wasn't a big reader like that. Like I can read, I knew I was smart, but it wasn't really cool to be smart, right? And let's just be honest. In the inner city, it's just not that cool to be smart. So I wasn't a big reader. But in college, I found out what kind of reader I was, what kind of learner I was, because I actually wanted to go to college. It's different energy when you have to do something versus when you want to do something. So I was actually in there, like actively learning, like really trying to do it right this time, right? The point I'm trying to make is when I began reading, like doing my homework, reading chapters and stuff, like I realized that I had to read stuff more than once to actually get it. Some people might have to, only read stuff once and get it. But I learned that about myself. You know what I'm saying? So everybody has a different learning curve. And you're going to have to learn that about yourself. That if you wasn't, studious in high school like me, you might have to go the extra mile. You might have to stay up till 2 a.m. to keep going over concepts. And that's what kind of learner I was. And I still am. Like if I don't get it, it messes with me until I get it. So that's how I was with this options trading, man. I had to get it. Like if y'all know my story, like I had to get it. So I was acting like I was back in college. Mind you, at this time, I'm like 3 years out of college because I graduated in 2017. I learned in 2020. So I'm still kind of in the groove, you know what I'm saying? So I acted like I was in college again. Watched the course that I took. Shout out to Todd Cap. Watched it over and over, each video, took notes, watched it over and over, and then started practicing it. So it's not just learning, because people will just overload themselves with information and never put it to use. Super smart, know how to do it in their head, but don't have any experience knowledge. And that's a different kind of knowledge. So the gem is don't beat yourself up. Get your reps in and really go in, really learn this thing. and I do my best to make it as simple and plain as possible. So yesterday, y'all know we got to look at the SPY to see what's going on with the general market. So yesterday, I told you guys that we were going to test because it dropped below this support level and it's pretty exhausted. So I said it was going to retest this because once support is broken, it becomes overhead resistance. So we can expect a test of this level here. So today, what happened? It dropped and it retested it. You see these green bars? You can't see that in the daily bar. That's why you have to drop down. See this whole bar, this one little bar, each bar actually represents a whole day of trading. So in order to see what's going on in that day of trading, you have to go into the trading time frames, which are these right here. You have to pick one though and use that as your trading time frame. Mine is the 2 hour. You can go back in the previous videos and actually in my course, I show you how to pick your trading time frame. But it's basically contingent upon how long you want to be in the trade because each trading time frame has different levels of support and resistance. So here we see that one bar turned into 4. So this represents that whole day, this whole day. So it try to retest here, but this is resistance now. But if anything, you'll be looking for any strength here and buy and position yourself for puts in the strength. Wait for it to finish and then position right here for your puts because the next level down is 360. And I told y'all that yesterday and Friday. The next level down that it was going to try to test is 360. And look where we at already, 364. And we're going further down because the daily time frame says we have a new low in the MACD, momentum to the downside. So any strength in these trading time frames are going to be short-lived, like these right here. This is short-lived. So I will be waiting for this bar right here. I'll be waiting for the strength to finish. And then I'll position here for the puts. But knowing what the SPY is doing, pretty much all the rest of the stocks are going to be acting similar. So I'm still in GoPro. I got a 450 strike price on this. Right? Y'all know how the small account challenge going. I'm gonna pull that up in a second. But the next level down for this is way back here somewhere. So that's how insignificant it is. So take note of that. There's no support, nowhere here. Nowhere within the past, how many months is this? So we're here in damn near October. So September, August, July. There's nothing here. So the further back the level, the more insignificant it is. So the level is all the way back here in 2021. This is the level. So it's a level, but it's so far back, it's insignificant. So it's falling through that. Probabilities say it's falling through that. I don't want to act like it's 100%. Nothing is 100% in the market, but that's how far back the level is. Plus, now at this point in time, we have downwards momentum, but we have strength in this MACD. So, but it's going to be short-lived. So we can expect this to rally to a level. And it looks like this is the level right here. So the highest I'm looking for this to go is 505. And it did that today. And it's messing around here we see a double top, I think it's going down tomorrow. But I got time on my contract. So this is why I tell y'all to put time on your contract. But every stock is different. So I'm giving this stock, I gave it 15 days to go to 450. Basically, I'm giving it 7 to 8 days because, of course, remember, we're holding our contracts only 50, slightly over 50% of the expiration. So I have a 15-day contract. I'm only holding it for 7, 8 days. You get it? So I'm giving it 7, 8 days, basically all week. I'm giving it all week. By Friday, I'm giving it to Friday to fall down to 450. I'll probably take profit before 450. Actually, the level was about 442, but it has to cross by 450 to get to 442, right? So I picked the 450. So I'm gonna probably take profit around 440 something. No, 450 something. Before it gets to 440, I'm gonna take profit. Because of course you don't want to wait to the exact level to take profit, because of course, remember the previous videos, it gets volatile at levels. So I'm still in this, but here's a jewel, y'all. I recommend everybody subscribe to at least 1 or 2, preferably 2 little newsletters. Seeking Alpha, maybe Benzinga, Market Watch, something. Subscribe to some type of newsletter so you can get ideas, not necessarily so you can make executive decisions, but so you can get ideas. Reason why is because something came across my screen. Now, only informed people like you that are watching Cheef and Chart and getting these concepts, know that there's layers to what the journalists be saying. So you have to keep in mind that, take it for face value and look further into what they're saying, because they say blanket statements that the untrained ear and eye would just move on. So for example, I got an alert that said, yo, is AMD finally oversold? Now, if you guys know or read my basic investing blueprint ebook, we talk about the oversold and overbought conditions of a stock. So when something is oversold, that means that people have been selling it off. So it'll be something like this: mad selling, mad down, stock going down, right? And there's an indicator that indicates when a stock is oversold, right? And there's an indication on that same indicator. So it goes from 100 to 30, I believe. No, 0 to 100. And in the middle is 50. All right. So they say around 30-ish is oversold and around 70 is overbought. So too many people bought it. So it's due for a pullback, right? Oversold is too many people sold it. It's due for a rise. So they're asking, is AMD finally oversold? So let's look at it. My question is this. My question back to them, and your question back should be, is it oversold on what time frame? Damn. See, that's the stuff I don't be liking about journalists sometimes. You pull this indicator up. The RSI, Relative Strength Index, is the indicator that tells you about overbought and oversold. So remember what I said about levels on different time frames. So on the daily, there's levels, and there's only one bar that you can see. But when you go into the trading time frame, there's more bars for one, there's different levels, and there's different readings. So on the daily, it says oversold, yes. All right. Let's see if we can make this bigger. So yeah, it's at 23.74 on the daily. So in the 2 hour, it's at 21.94. So it's oversold in the daily and the trading time frame. Let me see. Relatable. And the relatable, look at this. It's up here at 30 something. Let's go down to 15 or to 5. So it's a blanket question. But what that made me do was go to the chart. Let's see if it's oversold, because that's what it should make you do, right? Is it overextended to the downside? And that's why these blue, you see the blue wiggly lines I have on there? Those are my Bollinger Bands. That shows me extremes. Like if something is outside of the bars, it's due for a pullback. So this shows me exhaustion. So I have that in combination with my levels, so I can just look at, okay, what is it doing with the Bollinger Bands and compare it to my level? That may pull back. Like, you know what I mean? So it gives me something else to confirm. But the less things you have on your chart, the better. But what I'm seeing here is I see slight overextension on the selling. But what I see is maybe is a slight pullback is due. But I haven't heard any catalysts in regards to why it should rally. But look at this. So it just fell below this level right here. And the next level down is down here. So when I seen it, it was at 68. It was just falling. So this is the level right here. Let me draw it in here, because I be eyeing stuff too much for y'all. My bad. So boom. So I seen that, right? When I went to the chart, I was like, damn. And the SPY just did the same thing, right? So I was like, okay. So I actually went to the weekly just to see what the weekly say, right? I need all the perspectives. So I said, let me see what the MACD is doing on the weekly. I said, damn. It looked like it just turned down not too long ago, about a week ago. It just turned down and it just fell below here. So it's not overextended on the weekly. On the daily, slightly, it might be due for a green bar, right? But the green bar is going to, because it just, like I said, it just fell through a support level from way back there. So what do we expect now? We expect a retracement to test that support level that it just broke. Support that's broken turns to overhead resistance. So now, yes, it looks like we're due for one of those green bars to retest that level. But in that green bar, you might be positioning for puts, because look, we have a new low in the MACD, downwards momentum. So any strength here, we want to be buying puts when that strength ends. How do we know when the strength ends? We go to our trading time frame and boom, we've seen, here's the retracement. It ended with the red 2 bars right here. So this is where I would have got my puts. And actually, I did. Now that we're talking about it, y'all know I was in GoPro, but based off of that insight, I went to the chart and I said, yo, this is a recipe for puts. This is a recipe for puts. So I say, you know what? Let me wait for it to stop falling and retrace, which creates a momentum divergence, right? Remember those previous videos? The retracement, the green in a downtrend creates a momentum divergence. So I waited for this because we have a new low in the MACD with strength. And it just broke through a support level. I'm adding things together that equal a high probability put play, right? We put all the pieces together. It's not one thing or the other. We're putting it all together. But that's going to take practice. That's going to take you every day working on this and seeing different things. And okay, that happens when that happens all the time. And you're going to start seeing the repeated stuff over and over and over again. So just like I just said, it broke resistance and then it retraces to test it. That happens all the time. So then you're going to start seeing this stuff. So this is where I got my puts. I got my puts around, yep, right around here somewhere-ish. And let's take a look at it. Because, you know, I told you I'm running this to 1 million. And I want to show y'all every day how it's going. That's not the new. Here we go. Let's get that was yesterday. This is today. Let's stop playing with me. Stop playing with me. Okay? Don't play with my P&L like that. So this was today, y'all. Up some more, right? So today is the 26th. All right. Oh, so it's not going to show. Yeah, it's not going to show what I bought today. Well, let's see. Oh, here we go. It shows in my orders. So I bought AMD at how much I paid for it? I paid 83 cents. Let me press 83, 82 cents. So I bought my first one. I bought two of these actually. I bought two of these. I bought one. Yeah, here we go. I bought one for $96. And then it started showing more strength because remember, I'm doing puts. So it started showing more strength, which, you know, when your put contract, the stock goes up, the value of the contract goes down because it only increases in value when it goes down. Right? So being that it was going up, that strength that we're looking for, it decreased the value of the options contracts for that strike price, the same one. So now they're valued at 83 cents or $83. So I bought another one. Why? Because I talked about this yesterday, managing your trade. If the parameters still are in place, why not get another one for cheaper if it's within your emotional threshold amount, though? We don't want you just buying contracts and you can't afford it just because they're cheaper. Right? This is why we want you to be within your emotional threshold when you trade so you can add to plays when things like that happens. So that's how I ended up with two contracts of AMD. But as y'all can see, it worked out because so far we're up $65. You know what I'm saying? And we got way more further to go because it's at 66. My strike price is at 62. I got a $62 strike and it's at 62 bucks. So, I mean, it's at 66 bucks. So that's $4 more that it has to fall. So if it's already at 62, just do the math, you know what I mean? It ain't even fall that much. So this is the beauty of options trading. So remember, I started this account with $100, but if you add in the free stocks that they gave me, you can say it was about 210 bucks. So I'm up 260 on that 210. So what is that? 100% profit? You know, I started this just to show y'all that you don't need a lot of money to grow it into a lot of money. People always ask me, oh, how much it costs to get started? Well, I'm showing y'all from scratch. So for argument's sake, 200 bucks. And it's doubled already. Doing exactly what I'm telling y'all to do and exactly what's in my course. So imagine if I would have started with 10,000. It would be 20,000 right now. Imagine if I started with 50,000. It would be 100,000 right now. I want y'all to just put that in perspective. What's going on here? So, let me go back to the SPY chart. So it's pretty self-explanatory. I'm holding this to the end of the week. I'm giving it to the end of the week to go down some more. And I'm taking profit before the level, before it gets to 62. I'm taking profit because at areas, it gets janky. A lot of volatility is going on there. So you want to wait, you want to get your money before it starts getting crazy in that area. That's how we do it, baby. So if you want to learn how to do this, make sure you hit the description. A few more courses left for only 50 bucks. Grab it before it goes back to 1,000. If you haven't already, make sure you hit the like and subscribe button and the notification bell so you know when I'm live. It's Cheef and Chart. It's your man Don Bucks. And always remember, ain't no competition. It's you versus you. See y'all tomorrow.